So a couple of days ago, I took an entry into this stock. This is Medicure. So we will do a complete analysis of why did this stock come on my watch list, and why did I take the entry, and how did I take the entry, and when did I take the entry. This is very important. There are a lot of lessons that you will learn in this video. So any stock that we look at, we do three kinds of analysis, which I have discussed in some of my previous videos recently. We do comparative analysis, we do technical analysis, and we do fundamental analysis. We means I do, okay, and I teach my students. So comparative analysis, let us look at the comparatives of this company. In comparative analysis, I look at the relative strength of the stock, I look at the relative strength of the industry, and I look at institutional demand. So I bought the stock on this day. So let me hide this. So this is what I saw as of the close of 29th of October. Okay, I was watching the stock all along, but I never took an entry. But finally here on 29th October, I decided that now the stock is ready to buy. And I will discuss why I thought exactly on that day the stock is ready to buy. Okay, so let's go to the comparatives first. So I have the habit of taking a screenshot of the comparatives when I see a base, well formed base like this with a proper buy point. So I have taken that screenshot. So this is Medicure 30th of October. Yeah. So for 30th of October, I have taken this screenshot. So before I bought the stock, this is what I was looking at. Okay. So look at the master score. It is 69. Anything above 60 is good for me. Okay. EPS rating, I don't give much weightage to EPS rating. This is 85. Anything above 80 is considered very good. As far as comparatives is concerned, I look at these three things: price strength, which is 85, fantastic. It is more than 80. Accumulation distribution rating is B. I want this to be A or B. Group rank is 11. I want this to be between 1 and 40, preferably less than 20. So this is 11. So that is like icing on the cake. So this stock is comparatively strong. I don't look at all of these things for comparisons. For comparatives, I only look at 1, 2, 3, these three numbers. Okay. That is what I mean by comparative analysis. Now comes technical analysis. Let's go to technicals. So here the closing price is above the blue line, which is the 50-day simple moving average, which is above the green line, which is the 150-day simple moving average, and which is above the red line, which is the 200-day simple moving average. So price blue, green, red. That is a sign of a strong stage 2 uptrending stock. The first criteria that I look for. Second criteria, I look for minimum 10 candles in the base. So this is point 1. So you have minimum 10 candles in the base. Third, I look for minimum 4 points in the base. So let me draw the points for you. Okay. This has in fact 6 points, which is like icing on the cake for me. This is a classic trade. So 1, 2, 3, 4, 5, and 6. So there are 6 points in the base. I just go from highest to lowest, then from highest to lowest, again from highest to lowest price. It's very simple. Okay. So blue, green, red, 10 candles, 4 points. Blue, green, red, 10 candles, 4 points. Remember that rule. This is the rule that I diligently follow. It is a non-negotiable rule for me. Okay. And icing on the cake is that the buy point, which is point number 5, is in the green zone. See, normally in the green zone, if the buy point is in the green zone, I am okay with 4 points in the base. But if the stock gives me 6 points in the base and the buy point is in the green zone, well, nothing like it. It is fantastic. I love that. Okay. That's why I keep saying icing on the cake. So I draw a yellow line at the high of this candle, which is point number 5. I draw another yellow line, which is 1% above this yellow line. So that becomes my buying band. When the price enters this band, this 1% band, that is when I want to buy the stock. I planned a 5% position size on this stock. Okay. So technically, this stock looks strong. It is a stage 2 uptrending stock. It is forming a base. It has formed a proper buy point. The distance between the current closing price and the yellow line is less than 5%, which means there is tight price action. The price is not too far away from the yellow line. And let us look at the stage. So we have to look at the stage. What stage the stock is in? Is it early stage, middle stage, or late stage? The more early you buy, the less risk in the stock. Okay. So let's go to Poly Medicure. So I click on this. I click on consolidated. See, now the ratings have changed. The group rank has gone from 11 to 5. Why? Because the breakout came. We will discuss the entry and the breakout. But see, there is a green dotted line here. So when I click here, it says stage 5. So there is risk in this stock. Although it is technically strong, it is not technically great. Okay. What I want to buy is a stage 1 or a stage 2, sorry, base 1 or base 2. Here, see here, the second line, it says stage 5. It should be base number 5. It should not be stage number 5. So Market Smith needs to change that. But anyways, whatever they do, I respect them. But I interpret that as base number 5. So I'm buying this stock late. But see, important point, if you notice, on this day, just one day before the breakout, this breakout came. One day before the breakout, there is a blue dot on this blue line. The blue line is the relative strength line. It compares the performance of the stock against the Nifty 50. As you can see, the slope of the blue line is rising, which means the stock is doing better than Nifty. So when Nifty comes down, the stock doesn't fall as much. In fact, the stock goes up when the Nifty falls down. And you might have noticed this in the past 2 days. The Nifty was going down and this stock is going up. That is called as divergence from the general market index. When I see a stock which is going against the general market trend, that means it is showing extraordinary strength. See, the blue dot keeps coming. Okay, because when the market is falling, this stock is rising like 8%, 3% in a single day. Okay, so ignoring the two breakout candles, just before the breakout, there were blue dots, which is the 52-week high in the relative strength line. Okay, so whenever you have a blue dot in the base, inside the base, that too before the breakout, that's considered a very positive sign. So even though this is base number 5, even though I am buying the stock very late in its uptrending journey, I would still consider this as low risk just because of this relative strength, extraordinary relative strength. Okay. So maybe due to fundamentals or whatever reason, the stock market has its own reasons to push a stock price up. So for those reasons, I consider this as low risk. So technically it is strong. So comparatively it is strong. Technically it is strong. Fundamentally, well, there is no question about it. Just look at the fundamentals. Do you see any red color here? No. And this is as for the latest, but these fundamentals don't change overnight. Okay. The screenshot that I took is the same as what you see here. So the September quarter earnings are already published. So double digit growth in sales and earnings on a quarterly basis. What else do you want? Return on equity is more than 17%. What else do we want? Can we look at the margins? Let's go to margins. After tax margin 18.58. So back in 2007, it was 9.74. Now it has doubled. 5 years ago, let's see, it was 10.47. Now it is 18.58. So here is a stock where you have double digit growth in sales, double digit growth in earnings, margin is expanding, return on equity is more than 17%. What else do we want? Okay, the stock is comparatively strong. It is technically strong. It is showing 52-week high relative strength line in the relative strength line. So the stock is comparatively strong, technically strong, fundamentally strong, which is great. There is only one problem with the stock. See, generally, these kind of stocks, I don't like to micromanage. I just buy, I keep my stop loss at 8% and I just give it a day. Okay. On the breakout day, I give it time and I give it more room to fluctuate. However, there is one problem with the stock. Let me explain. You see the average daily volume. See, it is 161.287 thousand. So any stock which has an average daily volume of less than 200,000 shares, I consider that as a low volume stock. See, the stock market is huge. If the stock market is so big, $5 trillion market cap, then why is it that the volume is not coming in a technically and a fundamentally strong stock? Okay. Stocks with low volume, okay, have a bigger chance of getting manipulated. The big money or the institutional money have the enough financial resources to influence such stocks, to influence the prices of such stocks. So that is why it is too risky. You can see the volatility in this stock in the past 2 days. I don't like this volatility. I want tight price action. But anyways, overall the setup looks good. So I decided that since this is a low volume stock, I will micromanage. If the volume would have been more than 200,000 shares, I would have given it more time to fluctuate. I would have given it more distance to fluctuate with a proper stop loss at a larger distance from the yellow line. So you understand, depending on the personality of the stock, I decide whether how much room should I give to the stock, how much time should I give to the stock on the breakout day? Okay, because as a trader, I am actually a professional risk manager. I have to understand which stock carries more risk and which stock carries less risk. Okay, so then the breakout came. Now the entry, which is the main point of this video, which I forgot. So then came the breakout. Stock went up 9%, 8.5% in a single day. But this was not an easy entry. Let me make that very clear to you. I will take you to the 15-minute chart. I struggled with this entry. Okay, I could have easily missed the stock, but I was brave enough to take a re-entry into the stock because I have confidence in my analysis. Okay, I don't want to let these opportunities go away. I will show you the struggle that I had while taking entry into this stock. And the next day, the stock went up even more. But this upper shadow, see, the volume was higher than the previous day, but the upper shadow, you have a long upper shadow in this stock, which is a problem, which is a sign of supply. But, anyways, I will handle it. I have not yet sold the stock. And by the way, disclaimer, anything that I discuss on this channel is not to be considered as a recommendation. So please don't buy this stock here. The ideal time to buy the stock was in the yellow band. Okay, so you can't buy the stock here. It would be an extended stock. And even if it comes down and starts to pull back, please don't buy because you are not doing the right thing. You have to do your own analysis. You have to do your own due diligence. I am explaining my trades to you so that you can understand my thought process. And you can apply the same thought process on all the stocks, not just this stock. Now let's go to trade execution. Let's talk about entry. As I said, the entry, I really struggled in the entry. So let's go to the 15-minute chart of 30th of October. So this is 30th of October, first candle. So morning, the night before, I had placed my alert at 2655. So 4 rupees below the yellow line, I had placed my alert. Market opened at 915 here, which is good. I want the price to open below the yellow line. The stock hit my mobile alert. So it hit 2655. I got a sound notification. My mobile phone gave me an alert in the form of a sound. So I got alerted that something is happening. So I checked my mobile phone. Polymed stock had hit my alert. So which means it was very close to the yellow line. And by that time, great volume had come in. So the average volume on this candle is 8,000 shares traded, but 96,000 shares were traded in that 15-minute period. So imagine when I got the alert, the volume was not 96,000, but it was much larger than 8,000. So I said, okay, it's time to get into the stock. So the moment it traded one tick above this 2659.25. So when went to 2659.30, I started buying my shares. So if let's say I plan to buy 100 shares, so I will never buy 100 shares. I will buy maybe 20 shares. Then I will wait, give it some time, we maybe wait for 1 or 2 minutes, then buy another 20 shares, assuming the price and volume start keep going up. So then again I wait for 1 or 2 minutes, watch the price and volume closely. Again it starts to go up, I buy more shares. But all of my purchases are happening inside this band. If the volume and price start moving very rapidly, okay, without giving much time inside this, then I will immediately put all my shares in the order. So I don't want to miss out on the stock. So I will put 110 shares, and then suddenly if the price starts to move very rapidly, I will put a 90 shares order immediately. I will not play around with 20 shares and 20 shares and 20 shares. See, the whole point of discussion here is you want to buy all your shares inside this band. Now, sometimes you will get time. The stock will give you like nice 4 or 5 minutes to make your purchases. But sometimes within 10 seconds or 15 seconds, the stock just skyrockets. So you only have that small window in which you have to make your purchase. So don't play around if you see very quick volume coming in. So keep an eye on price, keep an eye on this volume. If you see very quick volume coming in, just jump into the stock because that's what you planned to do. Now, look what happens next. Okay. Stock comes crashing back down. And this is natural. This is expected because some kind of profit booking comes. If I go to the monthly chart, see the stock is at all-time high, right? So at all-time high, you naturally expect some profit booking by the people who already bought on that 15-minute candle. So maybe some intraday traders or something like that. Coming back to the 15-minute chart. So it came down. Okay, now I was nervous because this is not what I expect with a stock. I was not surprised to see this candle, but with a breakout stock, I expect a follow through candle. Follow through means a green candle after the breakout candle here, but that's not what I expected. So I prepared my mind that probably this breakout is going to fail. So I need to start reducing my position size. Okay. So the stock started to come down. Here, I did not sell on this candle. Then the stock started to come down. So during this downfall, I started selling my stock. So let's say I bought 100 shares. Okay. So I sold 10 shares. Then it came down. I sold 10 more shares. Then it came down. I sold 10 more shares. Then I sold 30 more shares. By the time it reached here, I had sold all my shares. Okay. So what I'm trying to say is I am adjusting my position size because I want to control my risk. This stock could have easily fallen like 4 or 5% in a single 15-minute time period. I did not want that to happen with me. That is why I kept on reducing the position size. Okay. But then it immediately started to move up. Okay. So by the time it reached here, near that yellow line, I bought back my shares. So when I bought here, my average execution price is in between the two yellow lines. When I sold here, my average selling price is in between the two yellow lines, which means my loss on this trade is somewhere between 0.5% to 1%. So I booked that loss. Okay. Approximately 0.5%. Okay. Then when it bounced back on the same candle, I bought back all my 100 shares. Okay. 100 is just a number that I'm mentioning. It's just to give you an example. Okay. My position size was 5% on this trade. Next, I bought back, then it again started to come down. So I again had to manage my position size. See, I'm micromanaging the trade because I have the time to sit in front of my screen and manage the trade. But if you are a busy professional, you are working at a 9 to 5 role and you cannot micromanage the stock, in that case, what I would recommend is you buy the stock when you get the alert, or you put in automatic order. Once the order gets executed, put in an 8% stop loss and give it a day. That is the best you can do. Okay. You cannot micromanage the stock unless you are in front of the screen. So now look at my second attempt. As it started to go up, I bought back my shares. It came down again. I did the same procedure. I began selling the stock, reduced my position size. So another 0.5 to 1%. So by the time I finished my second attempt, I had already lost close to 1% on this trade. Okay. 0.5% on the first trade, 0.5% on the second attempt. So by this time, my mind was like, I'm going to give up on this stock because, a stock which makes me struggle, a stock which makes me micromanage is not an ideal stock. An ideal stock is the one which, when breaks out, you get one attempt to buy the stock. You buy the stock and it shoots up above the yellow line, it never comes back. That's the proper breakout stock. Those are the stocks that I am ideally looking for. It is like you are waiting on the railway station for the train to come. The train comes, it takes a halt for a couple of minutes. You put your luggage inside, you enter inside the train, you take your seat, and the train starts moving. That is what I expect to happen. The stock goes up, comes into the yellow band, gives me around 4 5 minutes to make all my purchases, buy all my shares, gives me price and volume confirmation, and then after I buy, doesn't come down, carries forward, and never comes back during the day towards my yellow line. That's what I expect to happen. And this stock was not doing that. So I'm explaining to you my struggle with this trade. Okay. Trading is not easy. Trade execution is not easy. Okay. So if you have time, please micromanage the trade. If you don't have time, go in with an automatic buy order with a small position size, because automatic buy orders carry risk. Okay. And then keep an appropriate 8% stop loss and then give the stock some time. Whenever you get time during the day, if you are in office, have a look at that trade. Okay. Now, by the time I finished my second attempt, I had already given up. Then I said to myself, okay, I have lost 1%. But there have been trades where I have made like 15, 16%. Why not just make one attempt? Because the stock is comparatively strong, technically strong, fundamentally strong. The only problem is that it is a low volume stock. So I can expect this to happen. I can expect some manipulation by the big players. So I decided in my mind that one last attempt I will make on this stock, not more than 3 attempts. That is my absolute limit. Then I saw some green candle developing here. So you see the opening, there is no shadow. Okay. Some green candle developing here. Okay. So the moment the stock opened here and it started to go up, I saw a small green candle. I started making my purchases in that. And by the time it reached this level, I had bought all my shares back. Okay. So, and this candle closed very strongly with high volume, 2.72% rise in a 15-minute time period. That was the pullback that I was looking for, because a stock which is comparatively, technically, and fundamentally strong, you would expect the stock to bounce back from that yellow line. The first yellow line is important. The second yellow line is for our reference so that we don't get involved in an extended stock. But the important line is the first yellow line. That is when previous resistance becomes a new support. And once it took off, then it never came back to the first yellow line. The second yellow line becomes irrelevant because you have to make your purchases inside that band. Okay. So that is the story of my entry into this trade. This is what you will have to learn by experience. This is something that no trainer can teach you. You have to do this. You have to learn this by experience. But one fundamental principle that you have to keep in mind is never buy a stock above the yellow band. I call this the yellow band, okay, between the gap between these two yellow lines. Never buy a stock above the yellow band because it is extended. Never buy a stock below the yellow band because it is premature to buy. Okay. Now, if you see, I go back to the daily, I got the follow through, but there is some hesitation in the stock. This is natural to expect considering that the stock is at all time high. But we have to see what will happen. I have placed my stop loss at 2659, so 25 paise below the uh, first yellow line. And by the way, I have to explain this to you. When I bought here, okay, when I was making my purchases here, at that exact moment, I had placed my stop loss at 2659, so which is 25 paise below the yellow line. So I decided that this time I will not sell all my shares gradually. I will sell it at one particular price. Okay. And thankfully, it never came back to that yellow line. So still my stop loss is at break even, or I would say almost at break even. I have lost 1% on this stock, 1 to 1.2% on this stock. But that much amount I've already made in this stock, but it is still unrealized. Okay. There is a big difference between realized and unrealized. The stock is like up 7-8% from my original buy price, out of which I have lost 1% in the trade execution. Trade execution, you will lose money sometimes, but I'm thankful that I got an entry into this stock. I made that third attempt. See, if the stock was fundamentally weak, probably I would not have taken the third attempt. So you have to understand how my mind is working here. Some stocks I will give more time, some stocks I will give preference. That depends on the personality of the stock. So let's see what happens. I'm prepared for any scenario, even if tomorrow there is a big tomorrow, sorry, today, because I'm recording this in the morning at 6 o'clock, 6:46. Today it's a trading day. There will be 1 hour of trading because it's the start of the new year. It's a holiday. So today, if it crashes like 10%, my mind is prepared for that scenario. Okay, I'm ready to take that loss because there is profit I have made on previous trades which can absorb this loss. But if it doesn't fall 10%, if it continues to go up or it consolidates, icing on the cake. Okay. Thank you so much for your time. I hope you learned a lot from this trade. I have covered a lot of ground. In fact, I have explained my entire strategy in this trade. So if you watch this video twice, maybe thrice, you will learn so much from this video. So I encourage you to please like, comment, and share this video with your friends, family, and business associates so that they will also learn this strategy and they will also become professional stock traders just like you have started to become. Thank you so much for your support on this channel. Thank you so much for your time. I will see you in the next video tomorrow. Take care.